I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. Happy New Year and welcome back to the show, Tim.
Jim, thank you, and Happy New Year to you too.
So many people have been asking me, do they expect, or do we expect, the major stock markets to take a big dip early in the year?
Well, I do have some intermediate degree cycle lows coming up ahead of us. So, yeah, I think there's going to be a dip into those cyclical lows coming up. No question about that. What that yields structurally, that remains to be seen. Does it trigger a Dow theory primary bearish trend change, or does it not? Does it break some of the structural, positive structural stuff that is currently still in place, or does it not? Don't know. That's going to be the test. But there is an intermediate, a clustering of intermediate degree lows coming to you. As far as the overall rally, I maintain, look, I make no bones about it. This thing is stretched farther, same story there, stretched farther than imaginable. We never seen anything like this. I never dreamed it was going to do this, but it's still the same bubble. And once we get, the setup in place with the markers again, they were lost, but once they're back in place, you bet it's going to be another very dangerous situation. I think that the bubble will burst eventually once this, but the setup has to be in place. I mean, it can't happen until that happens. But then I do think that it's going to happen, and I really think that our boy Trump is going to be the patsy. I think the handwriting's on the wall there.
What do you mean by that?
Well, I think the monetary policy, and I'm not trying to, pick sides here. I mean, it doesn't matter if Elmer Fudd was elected as president. The person in the seat or about to be in the seat has inherited this bubble and the monetary policy of not only the last 8 years, but really the last 16 years. Because we've talked about how the natural top in the market occurred in 2000. I mean, you can look at that with the economic indicators. You look at that with volume characteristics. We've covered that. I can cover it again if you want. Looking at the velocity of money, peaked in 2000. Looking at job participation rate, which Trump talks about, by the way. It peaked in 2000. The velocity of money, the volume characteristics, they changed from bullish to bearish, undeniable, in 2000. And so, the bubble that has been generated by the last 16 years and more recently out of the 2009 low, this last administration, the piper has to be paid. And I just don't see how it can continue to be pushed and pushed and pushed. And honestly, I don't think that this administration, the new administration, is probably going to do that. And, I just believe that in the end, he's going to be the blame. And I'm not trying to defend him or anything like that. I'm just saying it doesn't matter who was elected. I feel like that, at some point it just gets so extended that it's inevitably going to pop.
Does it help that the president-elect is really talking about protectionism? If anybody talks about building a plant in Mexico, they're going to face extra duties and taxes bringing that product back into the States.
I guess that's a matter of one's philosophy. And, I have to side with that philosophy, personally. I don't like to talk about the politics, really, but, the American corporation is so regulated, so taxed, and so burdened that it is hard to do business in this country. And I think that needs to stop. And, if it were easier to do business in this country, then a lot of that would take care of itself. But absolutely, the tax burden on businesses in the U.S., regulation, it needs to be addressed. Something needs to be done with that. And if companies, I don't think necessarily the way to address it is to just try to impose tariffs on companies that have gone abroad to escape all that craziness, but it needs to be addressed within the country. And for example, I stopped in a little store that opened up just down the road from my house, and they had a meat market on the side. And I said, so you going to put a place in where you can come in and have a sandwich and have lunch and sit here and eat? They said, no, we can't. I'm like, what? It's a convenience store. They sell wine on one side, neat little place, and then they have this meat market with the range-fed cattle, beef, and all this kind of stuff. Really nice little place, and you can't sell wine. And he said, well, I don't know. And so I kept asking questions, and what it was they didn't have the right bathroom, and the county wouldn't let them do it. Didn't have the right bathroom. They only had one bathroom. I mean, that is just ridiculous. And that kind of stupidity is what has to stop.
Deregulation has a lot of people afraid that the U.S. won't look after water or air quality anymore, but it's not that kind of deregulation, is it?
Of course not. Or it shouldn't be. Deregulation, I think, is let the marketplace be the marketplace. Don't stifle business. Let it go. Let people do their thing.
We'll have more with Tim Wood right after the break.
Gem International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. Gem International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Welcome back. We're speaking with Tim Wood. Tim, what do you see happening in the gold market in the new year?
Well, I still think there's going to be one more push down. I have said ever since the 2011 9-year cycle top that we had the 9-year cycle top and that we should look to sometime in late 16 to 17 time frame for the 9-year low. Well, we had a low in December of 15. That wasn't it, or should not have been it. It was too short. There should be one more push down, and it should be underway. In the short term, we do have a short-term bounce, underway in gold, but I think it's another counter-trend advance, and we should have one more push down into the next couple of months, ideally. And once we get the 9-year cycle low in place, then I think gold is going to be on a solid foundation to move higher for, the next several years. I think the longer-term trend will definitely reverse with that 9-year cycle low. As we approach the clustering of cycle lows, we'll be able to zero in on that low, and I'll be covering it in the research letters and updates as we approach that low. But I see no reason not to think that there's going to be a pretty decent opportunity with a brand new advancing 9-year cycle in gold, and that's going to be very positive for not just gold, but should be positive for the gold stocks as well.
The U.S. dollar still seems to be on a tear. In Hong Kong overnight, the LIBOR rate went up 30. It was at 30%. They say because of a shortage of U.S. dollars. How is the U.S. dollar going to do in 2017?
Well, the dollar, there's no question. Right now, the dollar short intermediate term, it's positive. Intermediate term, we should be at or near an intermediate degree top, and there's a clustering of cycle lows coming due there as well into the first couple months of the new year. Longer term, there's a 4-year cycle in the dollar, and I have no indication at this point that the 4-year cycle has peaked. But I do have a clustering of intermediate degree cycles that are due now. And so the dollar, what we should see is some weakness into the next couple of months, ideally. I mean, the thing is holding on. It has been very strong, but it hasn't succumbed to the cyclical downturn that's due, is what I'm trying to say. But it will, I think. You can't avoid the cycle forever. But I do see some intermediate degree lows in the next couple of months, and then take it from there. But at this time, the 4-year cycle is still positive longer term.
Oil has stayed above $50 for quite some time now. Do you expect it to stay there?
No, the same thing with oil. Oil has been more positive than I anticipated. I have said that I thought there was a trip back down to retest the lows that we saw last year, and I still believe that. There is a clustering of intermediate degree cycles due now there as well. The fact that it has not given way to those cycles is a very positive sign. I do think that there is a retest and a correction due in the next few months, and then from there, yes, it's up again. But originally, I questioned and kind of thought that we may see the February low of last year violated, and maybe not in a big way, but like a retest to build a base. And now I'm not so sure that I don't think we're going to see that. Actually, the structure tells me that we shouldn't see that violated. We should just see a correction, and then crude oil will be set to move higher, I believe.
Tim, when we're looking at other commodities, any outlooks for, say, soybeans or other consumables like that?
I need to look at them closer. Maybe I can do that for the next interview. I gave them, just a quick look a while back, and I did see some positive tendencies. Let me look at that, do some analysis, and maybe we can cover that in the next in the next interview. But just in general, let me say this: I do believe that we have had in commodities, there's a 3-year cycle that's dominant. And I do believe that we saw that 3-year cycle low back in, January, February, December, depending on exactly which commodity you're looking at. And that's when gold made its last low and oil made its last low. There was a clustering of cycle lows due there, and a lot of commodities bottomed at that point as well. And so that said, with the CRB index, there is a 3-year cycle which bottomed in conjunction with that low. And so until I see evidence that 3-year cycle advance has peaked, which I do not at this point, then that cycle is still positive, and you have to view any weakness as corrective, and that the resumption of the uptrend will continue. And so that being said, we should see the correction into, some intermediate degree lows there, and then it's going to be set to move higher. What and how the individual markets and the CRB index or complex as a whole behave as we come out of those intermediate term lows will be telling. But I do see, some short-term weakness into those lows, and then higher prices in commodities in general, yes.
Tim, because we may have a lot of new listeners in the new year, can you tell us a little bit about Cycles News and Views?
Sure. I have been doing the Cycles News and Views, the research letter, for, I guess, 15 years now. And it's a technical-based letter. It's based on cycles, which is nothing more. It sounds, to someone that may be new to technical analysis or this sort of thing, it may sound kind of hokey, but a cycle is nothing more than trend quantification. Things move up, things move down, and they ebb and flow to a rhythm. That rhythm, it can expand and contract slightly, but, there is a rhythm there. And you have, ways of quantifying what should happen. And so based on those quantifications, you can come up with expectations. And then, of course, you have indicators to help you determine if a cycle is actually topped or bottomed in accordance with those expectations. You kind of work in some ends to the middle. And then as far as the market, when I say market equities, I also do Dow theory work. Richard Russell helped me obtain some of the original writings from our Dow theory founding fathers. I've gone through that material and incorporated that with the cycles work. Is pretty fascinating. I was able to call the 2000 top, identified it, timely, and said that we would move below the 98 low, which we did. And then the next big call was the 2007 top. I said that there was an extended 4-year cycle, and that the more it extended, the worse the outcome would be. And that top was also easy. We had a high, I believe it was in June, July, with a decline into August, and I remember standing on the doorsteps of a computer place and people calling and saying, is this the top? I said, no, we need one more push because of the DNA markers. We got it in October, and bada bing, bada boom, market fell. And so that call was easy. The call with the 9-year cycle low the 9-year cycle top in gold in 11, that call was easy. Commodities in 2008 was easy. I admit this call with this market, with this bubble that we're dealing with equities, pardon my frankness, but it has been a bitch. And I think the reason for that is, and I'm not making excuses, because we see the cycles ebb and flow, we see the Dow theory stuff that fell into place, but then it would morph and blow out. And I think that the reason for that has been the enormous amount of manipulation and interference. But they will not get away with it. And that's what I'm saying. We still see the cycles ebb and flow, and we will see the DNA markers reappear. And the advantage of knowing that is that when they are there, then you're in the minefield. There's mines there, and you know the environment in which you're operating. But this bubble has become so, I don't know how to say this, so we've seen it for so long now, let me say it that way, that it feels normal. It feels normal. And it reminds me of crude oil. When crude oil was, it stayed over 100, went to 140 or whatever the number was. And I told people, I made the same analogy as I talk about this. I remembered, I said, you know what? It's been so high so long, the abnormal begins to feel normal. And I said, it's not normal. And, I kept saying it and made the call to the week with my friend John Grant on the air with the call in crude oil in 2008.
And Tim, Timer's Digest has put you at the top for picking gold correctly for quite some time, haven't they?
Yes, they have. Actually, I have been named number one gold timer for the last 52 weeks in 2016. Was also number one gold timer, named number one gold timer in 2013 and 2015, I believe, by Timer's Digest, absolutely. But my point is that when something becomes so abnormal for so long, it begins to feel normal. And that's where we are with equities. So my position longer term with equities has not changed. And, we still see that the cycles are still relevant. Dow theory is still relevant. It's just that it has not stuck. The opportunity will appear and then it won't. And then it's there and then it's not. And so I think that we will see another setup. And when we do, inevitably the bubble will burst. And it's going to be just as painful as the decline in crude oil was.
Tim, thank you so much for being on the show.
Thank you for having me.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. You're listening to HowStreet.com Radio. Our YouTube channel is Talk Digital Network. Questions for the show can be sent to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com Radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com Radio is a production of HowStreet Media Incorporated.